as we speak, we are getting the latest comments from the Singapore Trade Ministry now saying that the economy will see the impact from virus restrictions. So despite the fact that we saw a big upwards revision, even beating expectations, how sustainable is this growth?
Of course, I think the second quarter growth will see some downsides given the set of restrictions that we've seen from mid-May and supposed to last until the middle of June for now. The biggest impact will be on retail and recreation. However, I think the restrictions have been less severe than what we've seen in 2020. So, I think the impact would not be as severe, and there are some offsetting factors this time. The external demand is picking up very well, and there's a continued demand for semiconductors. The Chinese economy is doing quite well, so there's demand from China as well. Then the rising oil prices will likely continue to underpin, petrochemical exports for the year. So with all these, given offsetting factors, I do see that the manufacturing industry, as well as, some of the other sectors of the economy, such as finance and insurance, will continue to, do quite well. But of course, retail is one very important sector for Singapore. Also, I think trade and tourism remains very important, and we would possibly see further delays in a pickup there. So the impact, of course, cannot be neglected.
Yeah, the Trade Ministry continues to say that the new virus rules don't actually necessitate a GDP downgrade. But I wonder if it will necessitate a change of course when it comes to the Monetary Authority, because last time that they met, they actually indicated a return to a gradual appreciation bias. Could we see a shift in October?
So October is still far away, and things could materially change over the course of that period. So the good thing is that we are still at the start of the year, the first quarter only, and then the rest of the quarters could still, see pent-up demand coming back. And if it is a more synchronized recovery along with the global economy, we could also see a better impact in terms of trade improvement and the likes. But I do agree to your point. I think that there remains a risk that the Singapore Monetary Authority might delay the appreciation bias for the SGD near. They will have to also keep in mind how inflation is trading. Right now, we are seeing some highs in inflation, but again, I do think that is transitory, and the focus will primarily still remain on growth.
The Minister for National Development in Singapore recently spoke about the labour shortage that's being exacerbated by the border restrictions. Is that an issue that will be ongoing, and does that create structural problems, not just in Singapore, which is of course so dependent on migrant labour, but also the workforce across the rest of Asia?
Yes, I think labor shortages is one of the major problems that we are facing, especially given the second COVID wave, that we have massive wave in India, which supplies labor not only to the region, but also, going as far as Middle East as well. So, I do have concerns around labor shortages, even though I think Singapore still remains in a better position because labor supply for Singapore is pretty diversified, and it comes from, many different regional countries, given that 2021 has seen mobility restrictions much less severe than 2020, I think the scope for rebound is again seen. And as I said, we are still at the start of the year. Things could materially change if we could bring this current wave of infections into control quickly.
Very quickly, Bank Indonesia decision, are they okay potentially to move, given that inflation has been fairly stable there?
So I think for them right now, the bigger concern is the rupiah. The rupiah has been seeing a lot of pressures from the U.S. reflation story, the monetary policy and the talks of Fed tapering, high USD yields, but also there are concerns around weak domestic growth and another spot in cases after the festivities in May. So I think for them right now, inflation is really not a concern. We do see some gains this month, and again, like I said, that goes for most of the region. The gains in inflation will likely remain transitory and unlikely to bother the central banks for now, because the output gap is still negative, and that will continue to pull down the inflation numbers.